Matt, you pointed out in your weekly memo that this fantastic essay from Jordy Visser explaining why Bitcoin is in its silent IPO phase was something to really pay attention to. Can you break that down for us? Explain that idea to us in layman's terms for those who maybe haven't read it or just trying to look for a little bit of a glimmer of hope on a week like today, a week like this one.
It's more than a glimmer of hope, LG. I know the market's down. I know it's challenged, but it paints a very strong long-term picture. Look, Jordy is one of the best macro thinkers that I know. I read everything that I write. He writes publicly, so I encourage people to Google him and find his writing. The point of this piece was to explain the big paradox that's been weighing on people's minds, which is, why is the price of Bitcoin relatively flat despite all the good news, despite positive regulatory news, despite ETF launching, despite institutional adoption, sovereign wealth funds buying? Why has it just been frustratingly ticking sideways? And what Jordy does is draw on his background in traditional finance to make an analogy to IPOs. And usually when you see a big tech stock IPO, the stock tends to trade flat for a relatively long period of time. Facebook IPO'd at $38 in 2012, and it traded down or flat for 15 months. The same thing is true of Amazon, of Google, of other major tech giants. The reason, Visser explains, is that it's going through a distribution phase where the early adopters, the early investors, the founders of the business are selling some of their stake in the business to institutional investors. And it's only after that process is completed that you see the stock go up. To tell the end of the Facebook story, is trading at $650 today. So 38 to 650, but it went down for 15 months. The point Visser was making is the same thing is happening in Bitcoin. Bitcoin has reached a level of maturity where there's now an ETF, where it's owned by the Harvard Endowment, where it's owned by the Luxembourg Sovereign Wealth Fund, where it's accepted by institutions. And he was noting that some of the OGs have been selling some of their Bitcoin as it makes this transition into a post-IPO era. The reason it's bullish is that once you get through this sideways chop, what happens to these high quality tech assets is that they appreciate significantly, right? Amazon up 100,000%, Google up a lot, Facebook up a lot. Bitcoin, in my view, will be up a lot. If you have that framing, this sideways chop turns from an annoyance to a gift. A gift because it gives you the chance to upsize your allocations. You mentioned Jesse's at 99%. Maybe there's room for him to get to 100. I think there's still space and time. So that was what Visser was pointing out. And it just rung so true with me that I had to point it out. I think it's probably the best analysis of what's going on in the market right now.
That is, Jesse, I don't know what your last 1% is, but I want to hear what that is. We're gonna come back to that, what your 1% left is that is not 99%. That's not the other one. Matt, I'm just going to dive into that a little bit. One of the big price suppressors here is the OG selling. I think a lot of people are looking at that as bearish. And like you're saying, right, it's very similar to IPOs where you have early investors. But I think for a lot of people, like Bitcoin OGs are probably a bit of a different class because they're a little lesser known. There's no, maybe a lot of them are not these classic Silicon Valley VCs who have, a very clear game plan for their investments. What kind of reassurance can you provide people who are looking at the OG selling as something that's quite bearish?
Well, I think you should just accept that it's normal. I mean, those of us who've been around startups, even extraordinarily successful startups, and I've had the fortunate, run to do that in various parts of my life. You see founders participating in secondaries. They're people too. They have jobs, they have families, they have college tuition, they have houses to pay. Just because you're seeing some selling from OGs does not mean that they don't believe that Bitcoin is still on this trajectory to be a globally important asset. It's just that they made a wild bet, right? Bitcoin at $1 was a wild and crazy bet, and they got it right. They have generational wealth and they're diversifying. There are a few loud OGs who are saying Bitcoin has lost its way. It's become all BlackRock. But I think that's really the minority. The major investors that we talk to, we know some who are diversifying their exposure, but they're just doing that. They're diversifying their exposure, right? Mark Zuckerberg has sold shares of Facebook. He's still very bullish on the stock. And I think that's what's going on here. So give them their flowers, let them diversify, be happy for them, and know that we are at Facebook at $38, right? That is where we are at. Facebook is up 1,500% since then. There's that kind of return left for Bitcoin. And the other thing I think people should realize is that post IPO, these startups are much less volatile, much less risky. That's the other side of this story, is Bitcoin is less risky today than it was 5 or 10 years ago. Still has big upside, but less risk. That changes how you invest, but it doesn't mean invest less. It actually means invest more to capture that significant upside.
Bitcoin changed the investment game. Now AI changes the strategy. Crypto's wild ride demands perfect timing, selling before it drops, buying as it climbs. While most investors panic sell or hope, a select few leverage a crucial edge: AI. Blocktrust IRA's trading platform spots market patterns with precision no human can match. Since 2020, their Animus AI platform has outperformed Bitcoin by 250%. Visit milkroad.com/Blocktrust IRA today to get up to $2,500 in bonus crypto and transform your investment strategy.
Matt, how does a piece like this from Jordi Visser affect price? Because this thing is viral. I feel like every investor from super institutional down to retail has read it or is getting exposure to it, even like we're doing right now on the show, right? A lot of people probably haven't read it and they probably don't need to after hearing you explain it. Does this kind of permeate itself into the culture of the price action, where a lot of people who have deep pockets, who are ready to buy, maybe a little scared by this OG narrative, are now catching wind of this new idea that it's a silent IPO and it's reinforcing their positivity? Is something like this, is crypto enough of an echo chamber that it has that much of an impact, or is this just a news piece just pointing out what has already happened?
No, I actually think it does. I think it has two different effects, though. One is that short-term retail-oriented traders see it and despair. They're like, oh, the OGs are selling out. They don't read further into the piece to think what happens in the next 6 or 12 months. I actually think it was part of the reason we wicked down so hard at the early part of the week. Certainly the hacks didn't help. The problems in vaults didn't help. But I do think this like short-term view of this essay contributed to that. But I think eventually the market fades that view and recognizes what I said earlier, which is if you accept that this is what's happening, and I do think it's what's happening, this sideways chop is not a setback, it's a gift, right? And I think that's maybe why you started to see some bounce around $100,000. I think over time, more and more people are going to realize, hey, Jordi is right. We're going through this IPO consolidation distribution phase. And boy, do I want to own a lot of Bitcoin at the end of that, because then we're going to see that price suppression removed. And I think the asset move up substantially from there. At least that's my take. And I think over time, more and more people will understand that that is really the point of the essay, that it's a bullish essay for people who are invested for more than the next month.
I want to send to the other guys here and get their takes on this. Jesse, from your side, you read that article. Do you agree? Because you're very much like, you're both in like seeing the larger flows and also in the trenches. Do you agree with this take that's where Bitcoin's at?
So I actually haven't read that article. That was the first time I've heard that take.
Well, it's pretty accurate. What Matt said is pretty accurate to what it is.
No, that's a really interesting perspective and take. And it doesn't sound wrong. It's not like, I would agree with that. I would say some of the current price action, though, maybe to color in some of the other part of the picture, comes from a couple other things as well. One of those things being the fact that in August and September, we had that huge TGA rebuild. And so the RRP basically ran down going into September. And that's where we saw a lot of that kind of like market liquidity weakness. And then if you go into early October, we had an uptick in issuance from the Treasury. And so that made the liquidity environment even weaker. And then going from that, we had the government shutdown, which kind of further exacerbated as well. So I think it's more, I think alongside with that, you have a really clear story of like weak liquidity in the market. And so Bitcoin and crypto as a whole is really reflexive to liquidity. And you see a lot of these charts where a lot of these people post on X where it's like the total liquidity and like Bitcoin price and how it's like out of sync or whatever. And everyone's like, oh, why is it out of sync? This makes no sense. But really it's a market plumbing issue. The liquidity is technically there. Like for example, with the government shutdown, the liquidity is technically there. It's just piling up at the TGA. And so right now, with the weaker liquidity environment, Bitcoin is typically the first to react to that. But now you're also seeing stocks and the rest of the market react to that. But the good news is, like a step up in issuance from early October, market plumbing eventually expands to kind of like be able to handle that. The TGA rebuild is done. And when the government shutdown ends, there's a lot of back pay and other things that ends up going out, and those liquidity flows end up going back into the market. And I think a lot of people underestimate just how much of the like global liquidity is driven by government spending at this point, because we have so much debt. And so I think all those things coupled together with the fact that we had this huge liquidation event in October. And what ended up happening is, going into October, a lot of the OGs were saying, hey, 4-year cycle, we're going to have this parabolic move up into the end of the year. And they were net buyers. After that liquidation event, that flipped that huge group of OGs from saying, hey, oh my gosh, parabolic run up, to, oh, this is the end of the cycle. And so you saw a huge, those flip from buyers to sellers into this weak liquidity environment, which a lot of people attribute it to the headline event with Trump and China and all that kind of stuff. I really think it could have been any headline event that would have broke the market, just because it was pretty weak to begin with. And so really what I think right now is it's a story of 4-year cycle believers kind of rotating out, a weak liquidity environment, and waiting for that government shutdown to end, and some of that selling pressure to, and maybe that kind of goes into that IPO phase, some of that selling pressure to subside. And I think once we get to a point where in crypto, we kind of bury the 4-year cycle and people are like, okay, hey, this isn't a thing anymore. People kind of start to imagine and believe again that anything's possible. And especially going into 2026, I believe we're going to see a pretty decent liquidity wave. That's when things start to pick up again.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.